You're quite right. I mean, it's really the final segment, but it's also one that has affected everything, everything essentially.
Yep.
But, for the second time, in 5 years, Nigeria went into recession, high inflation. I mean, foreign direct investment dropped, borders were closed, and, there was also the drop in agriculture. It really was a major setback also due to the coronavirus pandemic. But some people argue that perhaps the COVID-19 pandemic wasn't the major thing that affected performance. But let's introduce our guests who are joining us for this final segment. Jamie?
Well, yes, indeed. We've got Dr. Abubakar Alkali, Public Affairs Analyst, joining us via Zoom from the United Kingdom. We've got Dr. Yabo Masha, Presidential Advisory Council member, will be joining us via Zoom from Washington, D.C. But we'll get all the others in. But take a look at this report now.
We're hopeful that this pandemic will be limited in time. So if it is an average of 3 months, we should be able to still close the year with a positive growth. But if it goes longer than that, 6 months, 1 year, we will go into recession.
A statement made earlier this year by the Minister of Finance, Budget and National Planning predicting that Africa's biggest economy will go into recession before the end of this year. Now the reality is here. 2 consecutive quarters of shrink in real GDP numbers. Owing to the impact of the coronavirus pandemic on the economy, which has caused a significant decline in oil prices and revenues, as well as a huge cut in production, which currently hovers around 1.67 million barrels per day, Nigeria is forced to look into other sources of revenue, like tax returns and the non-oil sector. This recession does not come as a surprise to analysts who predicted that the country will go into a recession, the second within the last 5 years, signaling an end to the 3-year trend of low but positive real growth rates recorded since the 2016 recession. With the country's inflation accelerating to a 14-month high at 14.23% in October, and cumulative GDP in the last 9 months of the year at minus 2.48%. The question is, how does this affect the average Nigerian?
There is no way the consumption index is going to grow or was going to grow because the disposable income has been eroded. There was no way you were going to have a positive investment index because the country has been experiencing what we call business climate hostilities.
With the results showing how badly hit the Nigerian economy is, many are hopeful that the government will develop a more practical approach towards building a resilient economy going forward.
Welcome back. Now time to talk economy, and we've got Dr. Abubakar Alkali. He's a public affairs analyst joining us via Zoom from the UK, as well as Dr. Yabo Masha of the Presidential Advisory Council. She joins us via Zoom from Washington. Well, thank you both for joining us today on the program.
Thank you.
Thank you for having me. All right. Dr. Masha, let me start with you. The economy, the different diagnoses out there in terms of where we are currently, where we're coming from, and how we should proceed. Let's get your impression in terms of where we are at the moment. You could predicate it on the budget projections, if you will.
Okay, thank you very much.
Go ahead.
So thank you very much for inviting me to this very important presentation and interview. In terms of where the economy is, this is 2020. It's the year of COVID-19, and it's also the year in which we have this substantial decline in oil prices and also in the volume too. So it's not the best place to be, but we can take solace in the fact that this is something, the downturn is driven by the external environment. Both factors are beyond the country's control. So we are in a downturn, we are in a recession. We are waiting to see the data for the final quarter of the year, and it may or may not be better than the last two quarters. I think the very last quarter, quarter three, is showing an upward movement. The contraction is less than what we had in quarter two. So that's fine, but we really can't say. But the best guess is that with the disruptions from the SARS, end-SARS protest, and some of the security challenges we've had in the past few weeks, it's not too clear whether this last quarter will be better, and then we may very well have a full year of contraction. But the good thing is that is really the contraction, which was supposed at least forecast to be 6% contraction in the early part of the year, is being revised up downwards to 4% maybe. So that shows that the economy has been more resilient than was initially thought. And then we wait and see what the numbers say and how the next year's budget will improve the outcome.
We'll look at some of those numbers in a moment, but we can't forget Professor Uche Owaleke, who is a professor of capital market, Nasarawa State University. He's also the president, Capital Markets Association of Nigeria. He joins us from our studios in Abuja. Good evening, Prof, and thank you for joining us this evening. But let me just follow up on some of the figures that Dr. Marsha pointed out before I bring it back to you, gentlemen. Well, looking at the figures, Dr. Marsha, well, yes, COVID did hit, but we also did see that even the figures from 2019 did show that much as we projected a strong GDP growth rate of 4.5% in 2019, the ARGP, according to the MBS report, did indicate that in May, the economy only grew by 2.01%. And as a matter of fact, AFDB projected that we're only going to grow for 2.3% in that same year of 2019. So we were not even that buoyant coming into 2020. So we cannot blame it on COVID, can we?
Well, this is, I think we're talking of 2020 roundup. So I'm focusing more on what happened in 2020. Definitely, the economy in the past, I will say, since 2014, actually, when we had that first steep decline in oil prices coming out of a very huge boom, which resulted in oil prices of over $150. So the economy has been on an extended period of slow growth, and then recession in 2016, 2017. And 2018, 2019 was more like a very slow recovery of the economy. Now, there are important fragilities in the economy that means that there are no quick fixes. The best is that the economy will grow at a slow pace whilst the necessary reforms are going on, and then in a period, more in the medium term, like 3 years, then you can start seeing growth of 5-6%. But yes, you are right. The economy has been on a slow growth. 2.3 is less than the population growth of 2.6, and that could very well persist for maybe another 1 or 2 years before we can really see that big push. Part of the reasons for that is that, to a large extent, we're still dependent on oil. There's a lot of structural transformation taking place in the non-oil economy, but they are going to take some time to work their way through the whole economy. So for now, we're going to be exposed to some of these instability in the market.
Thank you, Dr. Marsha. Just before we come to Professor Owaleke, to Dr. Alkali, and this is a question I'm asking based on, perhaps, let me rephrase it. In your estimation, what would you say was the perhaps major factor that affected the performance of Nigeria's economy in 2020? This is to you, Dr. Alkali. And do you think that the Nigerian government handled it well enough in 2020?
Thank you very much for having me. I think to a large extent, you cannot talk about the economy in 2020. By and large, you cannot talk about many other things without reference to coronavirus, COVID-19 pandemic. And I think one of the key reason why the economy was sluggish, was slow this year is largely attributable to the pandemic. However, I also think that, over dependence on a commodity, on one commodity, a unique commodity economy is very, very vulnerable. Unique commodity, of course, in the sense that the economy is largely dependent on oil, and any oil shocks, any fluctuations in oil are likely going to impact on the economy. So to a large extent, I think what has happened should be another eye-opener, another opportunity for us, to put our acts together, because there is really a very, very important need, very urgent, if you will, very urgent need to diversify the economy away from oil. Of course, government is talking about it. Whether the right structures have been put in place, that is another different thing entirely. There is need to diversify this economy. And in this diversification, I think there is need to focus on specific areas. Because I don't think diversification in the sense of saying, okay, we are going to diversify the economy around 100, 150, 200 different items, I don't think is reasonable. We need to diversify on a single, on specific routes. What am I talking about? For example, if the government can pick one or two commodities, one or two items. Of course, the diversification I'm talking about is largely on the agricultural sector. Government is talking about, diversification towards agriculture. Okay, fine. Now, within agriculture, where are we going? If you ask me, and yes, you did ask me, I think it's better within agriculture, we pick a particular commodity. We can say, for example, textile. Our diversification is going to focus on textile. And in this diversification, there is need also to look at appropriation, to look at budget, because I think the conventional method of budgeting needs to be reviewed. If we are diversifying towards a particular commodity, towards textile, for example, of course, there is need to invest heavily in cutting, in revival of the textile industry. So let us say, for example, this chunk of the budget, this chunk of this budget, next year's budget, for example, is going towards textile industry, a large chunk of it. And then we pick on that route. Now, the second aspect of your question, whether I think government has handled the situation very well, to a large extent, I think government has put some measures in place, but there is more to do. There has been a lot of distraction, resulting from government's attention, to pushing in the effect of the pandemic and other areas. So I think government, in handling this kind of issues, this kind of random issues, this kind of economic shocks, there is need for a sort of model. I want a situation where the government is, pushing on a particular direction,
okay,
implementing a particular economic model. And as I said, looking at an area, a particular area. Let us say, okay, look, we have we are focusing our attention on textile. I think this is a realistic a realistic focus. Let us say, look, we are investing this, chunk of the budget on the textile industry, and let us say, based on the model, based on our plans, we are looking at making Nigeria the hub of, textile in the next
All
5 years, for example. Let us set targets. Let us have benchmarks.
Okay, we'll take a look at some of those budget benchmarks and projections in a moment, but let's bring in Professor Owaleke and find out, Prof, what would your assessment be of where we are at the moment regarding the economy?
Yeah, thanks, Chamberlain. I would like to start by wishing the viewers Happy New Year. Let's not make a mistake about it, that the present recession that we are in has been primarily caused by the COVID, because if you recall, we were in a recession, before now, 2016 to 2017, again on account of collapse in oil price. But after 5 consecutive quarters of that economic downturn, the economy, came back to the positive territory, and for 12 consecutive quarters, experienced, positive growth. In 2019, for example, the economy was growing at an average of 2.27%. As a matter of fact, towards the last quarter of 2019, we recorded a growth of 2.55%, even though that, of course, was still below the population growth rate, about 3.2. But the point I'm making is that the economy was already on a recovery path. First quarter of 2020 was 1.87%. Then COVID came. The first index case in February. And in response to the COVID, we saw what happened, lockdowns, movement restrictions, and of course, globally, supply chains were disrupted, demand too, became low to the point that we couldn't even sell our oil. So oil price fell. Okay. So all that now combined to result in the plunge that we had in quarter 2 of 2020 by as much as 6.10%. But of course, we also know that the government tried to intervene. We saw interventions not only on the fiscal side, but also in particular, from the monetary side. The central bank made a lot of interventions, including reducing interest rates on its interventions from 9% to 5%, granting 1-year moratorium, on loans, granting forbearance, and all manner of, palliatives. Okay, the federal government also scaled up its social intervention program. So what we now saw, accompanied with the gradual ease of the lockdown, we now saw a moderation of that contraction, in quarter 3, such that in quarter 3 we still had a contraction, but it was smaller than what we had in the first quarter, 3.60%. Okay, so the expectation is that by the fourth quarter, the contraction would, further reduce, and that was why, there's this optimism that by the first quarter of 2021, the economy will rebound and come back, in the positive territory. And the interesting thing too is that in all of this, if you like, economic downturn, we still had bright spots. We had bright spots, notably the telecom sector that continue to be in the positive territory, as well as the financial sector. You have had the recent news about our stock market. Our stock market, happens to be the best in the world as we speak in terms of return on investments, returning over 50%, on investments this year, and that's the best in spite of the COVID. But that's not to say that we still don't we don't have other sectors, many other sectors that are still in negative territory. But what's important is that if you compare quarter 2 of 2020 and quarter 3 of 2020, you would notice some improvement, even among those sectors that are still in the negative territory. And I said all these have come on the back of interventions that have been made. But it's also quite instructive to point out that the major challenge the economy faced in 2020 was not just the recession, but also rising cost of goods and services, or if you like, stagflation. So we had a case of recession. We also had inflation, on the rise, particularly coming from the food component, and that is why one would expect. I've always said that given that inflation rate today in the country is not necessarily driven by monetary factors, as the central bank, has also confirmed that the fiscal authorities, the government has, a lot of role to play, and that role will begin by tackling insecurity. That has been mentioned here. Because insecurity has also led to the fact that farmers couldn't go to farms. And
Thank you, Professor Waleke. We've just been joined.
So using a silver bullet, addressing the agriculture challenge, for me, would be like using a silver bullet, to address the issue of recession and stagflation. Because
Prof, we're going to come back to you. Just a moment. We're going to come back to you. We've just been joined by the DG of the NCAA, Captain Musa Nuhu. Thank you for joining us. I'd like to ask, the aviation has taken its fair share of the toll due to the COVID-19 pandemic, and looking at how it's affected the economy, especially when there was the lockdown, which was in March, the airports were shut down. There was the resumption, July, local flights resumed, and then international flights. But we still have the coronavirus with us. And, there is 2021 around the corner. Country is still hoping for a vaccine. But in terms of how it hit the economy, do you see a recovery in the near future?
Thank you very much, everybody, and wish everybody a happy and prosperous new year ahead. I hope it's going to be much better than what we came through. Yes, certainly the aviation industries and the tourism industry was one of the most hardest hit sector globally. And as you rightly said, there's almost a global shutdown. In Nigeria, for a period of several months, we had total shutdown, and that significantly affected the aviation industry. And as we all know, the aviation industry, moving of people, goods, and services, is a catalyst for economic growth and development. So when we shut down, a lot of businesses were significantly affected. Pre-COVID, the aviation industry in Nigeria was contributing approximately $1.7 billion to the economy, just about 0.5% of the GDP. And with the shutdown, we projected to lose the air transport industry in Nigeria, expected to lose almost $1 billion. So we're losing well over 50% of our contribution to the economy, which has significantly made life worse for the industry. The airlines are in very, very difficult situations. Just by their structure, their income is in naira, but most of their cost drivers are in dollars. And now the dollar rate has gone up. Not only has it gone up, it's even very difficult to get the dollars from the central bank because of competing demands from other sectors of the economy for this meager resource. They do their maintenance outside, they do their training outside, and that's the major cost driver. As per recovery, it's very, very difficult at this moment to project or predict what it's the recovery in the next 1 year. I estimate it's going to take a lot longer than probably 12 months for the economy, because the confidence to travel and the propensity to travel is going to take a while for people to really feel confident to travel. And in addition to that, in Nigeria, because of the difficulties faced by the airlines, they are operating at less than half of their capacity, which recently has, and because of the high demand, the air ticket prices have gone up astronomically, in some cases doubling. So it's going to be a rough and bumpy ride, but we've seen it's gradually coming back. But with the second wave, we don't know where the second wave is going to take us to. So it's really difficult for anyone to put his fingers and predict when we're going to get out of this. But it's certainly going to be a rough ride going ahead. And the government is doing its best to assist the industries with palliative of 5 billion naira to the industry. And I believe more is coming. And the government is giving other facilities such as single rate loans through the central bank to the industry, long-term rates to help them recover. But certainly the aviation industry in Nigeria has been hit hard. Aviation, but now pre-COVID had about 241,000 jobs. Out of that, it's projected 125,000 jobs at risk of being lost. It's quite a significant number of that have lost their jobs. And we expect more as the airlines and the other stakeholders industry trim down their costs. There'll be a lot more people will lose their jobs. So that has repercussions on the overall economy as people don't have, they lose their purchasing power, government loses income tax collection and all that. So it's really a very, very, very difficult situation for the aviation industry right now.
Well, Captain, is that to say that in spite of the budget that has just been passed by the National Assembly, it will not impact positively on the industry, the sector?
Well, budget is a projection. It's not a guarantee. We project what we think. And we are going into the second wave. I can tell you this year, during the first wave, we lost over 50, actually about 67% of our income. So with the second wave, we don't know. Nobody can predict how difficult it's going to be for the second. When are we getting the vaccines in Nigeria? When enough number of population will be vaccinated to really have control of this coronavirus? Yes, the budget is good. The budget looks very good on paper, but what is it on reality? The Nigerian economy has suffered. It's gone into recession because of the consequences of the COVID-19, also the crash of the oil price. So when the economy is not doing too good, the travel demand goes down, and that affects the industry. I mean, until other economic, micro and macroeconomic factors improve, the aviation industry is a good reflection of the state of the economy. As previous speakers have said, the Nigerian economy right now is in a very, very difficult situation. But we keep trying, we do our best. The government has been very supportive. The Ministry of Aviation has been very supportive. But the reality are the resources, and also the demand. It's the demand for travel goes down when the economy goes down. In Nigeria, you hardly have travel for tourism, vacation. Most of the travelers are either people going on business or government workers. And once the economy goes down, resources are down, those numbers come down, and that has impact on the industry.
Let's quickly take Dr. Masha, and this is getting your final thoughts on the issue. Yes. Okay, just asking, is there a very long road to economic recovery? How soon can we get out of this recession?
I think that some challenges. I think the first issue we should keep in mind is that even though the budget is a budget of recovery, and it's a budget that has allocated sizable amounts to different sectors and to programs that will aid the recovery. The major challenge with the budget is with the financing. So I think the projected amount to be financed is around $10 billion or thereabouts from borrowing. So if there is enough money, there's enough financing, and government can raise this financing from multilateral organizations, from other governments, bilateral donors, and also from the Nigeria domestic market. then that financing would be enough to at least keep the economy in a recovery mode. And I take the point that Captain Musa said, that a lot of the patronage of the aviation sector are business related and people working in government services. So we need to have we need to have adequate financing of the budget in order for the economy to start on a path of recovery, because as government spends, the private sector is also able to produce, and the consumers then demand for more goods and services, which then goes into improvements in economic performance. So I think that's the main challenge, the financing of the budget now. But that's only for the short run. That is, where do we go from where we are? How do we improve on where we are, which is a shock mode? Long run, we're talking of how do we have a more diversified economy so that if there is a shock to oil or to any other economic parameter, we do not find ourselves in dire straits. And I want to note that indeed there is substantial diversification of the economy. The three sectors, the agri sector, that's the primary sector, the manufacturing and industries, and the services. Services probably has 40%, 45% share of GDP, and the primary sector and manufacturing, roughly 35%. So that's a pretty well-diversified economy. But the problem is that in industries, where the industries are producing goods that are very low value added and that are dependent primarily on imported intermediate inputs. And in the primary sector, both in agri, there's very relatively good agricultural production if you are looking at cultivation. But when you look at extension services to reduce post-harvest loss, for example, I saw a report that only 30% of what is produced in the farms get to the market.
All right.
The remaining get lost in the system because there's no storage, because rural roads are not well provisioned, and a whole range of even marketing of goods and services produced in the farms. And we also see that in our oil sector, there's we have crude oil, but refining the oil, for every barrel of oil, you only around 47 or 49% is gasoline. Okay. The rest is more than 216 products, industrial products. And a country like Saudi Arabia probably makes about $15 billion a year from petrochemicals.
All right.
Now, a very exciting sector. That's an area that in our oil industry, we see what is happening in the non-oil sector being replicated. We are not adding enough value when our refineries are not working. So all of these issues are the areas where we are focusing on. We need to focus on to really have a transformation of the economy.
Okay.
It's going to happen. There are many opportunities now with the Continental Free Trade Agreement, and with all the other sectors that are coming up, all the opportunities opening up from the production that is getting out of China. So this is the time that we can get on the ground floor and use these crises, as it were, to take some very hard decisions that we have not been able to take in the past.
All right.
To incentivize production, we're talking of getting the exchange rate right,
Okay, well,
getting interest rate right.
Pardon me, but okay,
inflation to that range that it doesn't serve as a disincentive to investment.
Well, I'd like to thank you,
right,
Dr. Masha.
really,
I mean,
we'll have to end it at that point.
For things that happened the whole year 2020, it's quite difficult to discuss everything in just a few minutes.
Yes, indeed. So I have to thank you all for coming on. Dr. Yaba Masha is of the Presidential Advisory Council. She joined us via Zoom from Washington, D.C., as well as Dr. Abubakar Alkali, who is a public affairs analyst, also joining us via Zoom, but from the United Kingdom. And then Professor Uche Owaleke is of the Nasarawa State University and also the President's Capital Market Association of Nigeria, who joined us from our studios in Abuja. We also had Captain Musa Nuhu, Director General of the Nigeria Civil Aviation Authority. Ladies and gentlemen, thank you all for joining us today. And since it's the last time we'll see you this year, we just like to say Happy New Year to you all.
Happy New Year.
Thank you very much and Happy New Year to all.
And indeed, the best of celebrations for all our other guests that came in earlier on. Thank you so much.
Okay, so... yeah, it's not all doom and gloom, is it? But,
no, it's not. There were some celebrations in 2020.
Yeah, and we had quite a number of them. So...
yes, I mean, let's start. August, I think Africa was declared polio-free, meaning 0 cases of the wild polio virus.
That's right.
Nigeria was the last polio-endemic country in Africa and was officially certified free from polio after marking 3 consecutive years since the last case of wild polio had been identified.
Well, Dr. Akim Adesina is the 8th elected president of the African Development Bank Group. He was first elected to that position in May 2015 by the bank's Board of Governors at its annual meetings held in Abidjan, Côte d'Ivoire. He was re-elected in August to serve a second 5-year term as president of the African Development Bank Group by the Board of Governors of the bank.
And in June, we had the President, Muhammadu Buhari, who nominated Dr. Ngozi Okonjo-Iweala for the post of WTO, World Trade Organization Director General. She's the finalist for the position. However, the U.S. representative at the WTO took to the floor to insist that South Korea's candidate remained a contender and that Washington will not recognize Dr. Okonjo-Iweala as a consensus candidate for appointment as DG.
We all remember that. But then Anthony Oluwafemi Olasheni Joshua, I didn't know there were that much, claimed a stunning knockout win over Kubra Pulev at Wembley Arena to retain his world heavyweight titles. He proudly associates his roots to Nigeria, and his win got to the heart of many in the country, including me.
Right. And sadly, to some of the passages of this year, in February, Victor Abimbola Olaya OON, also known as Dr. Victor Olaya, died at the age of 89. He was a trumpeter who played in the high lifestyle.
Yeah, in April, Richard Akinjide, jurist and the former Minister of Justice, died at the age of 90. He served as the Minister of Education in the First Republic and the Minister of Justice in the Second Republic.
Also in April, the late Chief of Staff to the President of Nigeria, Abba Kyari, died. He was aged 67 and died after contracting COVID-19.
We also lost Senator Abiola Ajimobi. He was elected in 2003 as a senator representing Oyo South Senatorial District. In 2011, he contested for governorship and was elected governor of Oyo State in a closely contested vote. In June, he was confirmed to have COVID-19 and was announced dead on the 25th of June.
So the next time I'll be here, it will be 2021. We can finally say goodbye to 2020.
Gladly so too. And we hope that wherever you are, whatever you do, we hope you keep it simple, safe, and happy. Happy New Year to you all.
Happy New Year to you, and thank you to all the team, production, staff, management of Channels Television. It's really been a year.
So, on behalf of all of us, I'm Chamberlain Osor.
I'm Millicent Walker.
Good night.
Good night.